Stopped off in Vietnam last year.
Right, good afternoon everyone. Welcome. We'll declare this Audit and Risk Committee open. Are there any items of conflicts of interest that need to be declared for decision? There are none. Apologies. I think we've got apologies for Stella Lennox. Right. Can I have a mover please? Thank you, Councillor B. Seconded. Thank you, Councillor Goodwin. All those in favour please say aye. Public forum? No public forum. Items not on the agenda, there is one. We've got a supplementary report on the long-term plan which has just been circulated. Can I have a mover that we accept that please? Thank you, Councillor David. Seconded. Thank you, Councillor Tim. All those in favour please say aye. Right, items for decision. Don't spend too long distributing because you've got...
Right, I might get you to carry on.
Sorry, right? Sorry? Oh, let's go to Aratoy, yes, good idea. Let's do Aratoy and Destination Wairarapa. Thank you. Right, just don't let me forget the other items. All right, thank you. Sarah, would you like to come up here? We've got you can join the table.
Nice to see you all. I'll try to make this quick for you all. I first wanted to do an acknowledgement of the passing of a great friend to the Wairarapa and Junior and to Aratoy, Owen Pryor. He and the Pryor family have been important stalwarts in our community and very vocal supporters for the arts and heritage in our city and in our region. So it's a very sad loss to our community. But getting on to our report. So you'll see this is the fourth quarter, the end of our financial year, and we've ended it financially pretty much where we expected to be. As we've noted in the report, the last couple of months have definitely seen a tightening of costs for us, and which is to be expected in the current climate with freight costs going up, things like that. But very pleased to see that despite that we've ended on a pretty all-around even keel. This last quarter we've just jumping to having some great relationships with Robin White's exhibition Still Touring and our works on display now in Christchurch, and working with Hokainga to have their mannequins in their exhibition spaces. I'd have to say that the highlight of the last quarter was definitely the moon. We had thousands of visitors come and enjoy, spend what I was actually pleased to see significant lengths of time in the gallery, families including spending multiple hours in the space learning and playing and really engaging with the exhibition, which was great. Getting ourselves out there into the public through access and engagement, through our weekly articles and through our new radio program, which is going gangbusters. And also pleased to see that when you go through all of our KPIs, we have achieved everything we've set out to achieve in our KPIs. If there's anything in specific that anyone wants to ask questions about or engage with in the report, happy to answer any questions.
Thank you for that. Are there any questions? There are none. Well done. Well done.
Hopefully that's a sign for all of you for an easy meeting.
Thank you very much for that, Sarah. We've got a resolution. Can I have and I would actually do. Right. We've got Charlotte and Marcus. Chloe. What is it, Charlotte? Sorry, Chloe.
That's sarcasm.
Yep. It's the same report. 6.2. Yeah, just after the auditory one. After.
Is he?
Right. Take the report as read. Are there any highlights you want to bring to the committee's attention?
Just an opportunity to introduce ourselves. Firstly, just Marcus Stewart from Nuku'ula. I'm the new General Manager of Delivery in Nuku'ula. Come from the background of council, having worked at City Council for some 30 odd years, and Park Sport Recreation Manager over there. So I have knowledge of local government as well as the sport recreation sector. Chloe?
Chloe Fredrickson, so with Nuku'ula as the Wairarapa Partnerships Manager, so based here in Masterton.
So thank you for your time today.
So you're based, Marcus?
I'm based in Wellington, as my home office, but I live in Martinborough.
Oh, okay.
Wairarapa College. So
Oh, okay. So
fairly close by.
yeah, okay. Right.
We'll go to the office here as well.
Brilliant. Thank you.
Thank you. This is our 6-monthly report to the council, and I hopefully highlights Nuku'ula, the breadth of the work that Nuku'ula has been doing in the community, delivering initiatives, working and building relationships within the community, and connecting across a whole range of health, sport and recreation spaces. While we have 3 dedicated staff here at Wairarapa, it's important to notice that we bring all of our knowledge and our kaupapa to the work that we do, and hopefully the report shows that there are a number of different staff that also engage in the work that we do as well. As you mentioned, I'll take it as read. Just wanted to highlight a couple of things. The Well Wairarapa plan is now in the implementation phase, so that is funded by Te Whatu Ora. We work here in the wider Wairarapa on that plan, and it's focused on communities of high need and interest. And at the moment it's focused on Featherston and Piranawa, but is, over the next 6 to 12 months is moving into Masterton East and Masterton Central as well. The purpose of that project is to listen to community voices, build networks of support within the health sector, and advocate for accessible spaces and places where people can take part in physical activity and health initiatives. Some of the other work we're doing with Masterton Council officers around spaces and places work, and really want to thank the council officers who've been involved in that. They've really added value to the meetings that we've been to, and bringing valuable insights around the wider up to that forum. We're about to publish 2 major reports on supply and demand for sports fields and indoor courts, so they're due to come out in September. That looks at the allocation of sports fields and indoor courts right across the region, how well they're used, and whether there are gaps. I suppose just from an early reading of that and high-level stuff around Wairarapa, and notice that in general the supply is adequate, but there's some issues or possibilities for improvement around consistency, quality of facilities, and around charging across the region as well. So how sports things are charged for. And you may know that we're also involved in the affordable sports review that's going on. We're trying to provide a balanced view to that across that. Our places and spaces mahi in the future is probably going to move towards open spaces and connections. It's really pleasing to see the work that Masterton City Council is doing on the consultation around the cycleway between Lansdowne and Coombe. It's stuff that we're quite interested in supporting. Te Manawa Fund. So we administer a Community Activation Fund on behalf of Sport New Zealand. And to note is that it's been well oversubscribed over the last 2 rounds. I think that's a reflection of the difficulty of getting funding for a lot of organisations at the moment. We're finding a lot of those funding applications are much higher amounts than they were previously, and for a lot more different costs. In the Wairarapa, we've distributed about $50,000 from the last round, and from the round which we've just sat on last week, it was a more significant Wairarapa for these rounds. Green prescription work is continuing on and is really popular. We had 134 people in the Masterton area engaged in the program last year, which is a 35% increase from the previous year. And that's working with people with really high needs around lifestyle and on health issues and improving their physical activity. I'll pass on to Chloe just to speak about 2 other things.
Awesome. Yeah, so in our play space, so it's really cool to see the continued investment into play workforce at councils within the Wairarapa, particularly now with positions in Masterton being filled with Tammy there, which is awesome, and also in Carlton with Megan, who's just started as well. So that meaning there's going to be a stronger regional network, and along with that, so it's resulting in some new community initiatives being established, and as such, so we're hoping to see an increase in tūmanawa funding or applications for play-based activities here in Wairarapa. With the RSO Forum, so our sporting bodies are continuing to engage quite well here, which is great, and with our connection there, Nuku Order, we've been able to provide some training and support in regards to governance, coaching, and funding to the sector over the last 6 months. So we know with the cost of living and funding challenges being experienced by all community organisations, it's more important than ever to be connected and work together to overcome these. So yeah, that's ours. We'd like to thank you again for your time today and your continued support within our sport and recreation sector, and yeah, we welcome any questions you might have.
Thank you. Councillors, any questions? Oh, yeah, Councillor Trott.
Thank you very much for your report, and I'm a genuine believer in how sport and activity can contribute to positive communities. So, thank you for your work. What are sort of the key obstacles you're finding in terms of engaging in the various initiatives?
Colleague can probably speak to more around here. But from engaging the organisations, we're doing really well in that regard. They're coming to the table, they're interested in connecting because they've all had similar challenges. But connecting with the individuals themselves, a lot of it is around cost and time and all of those challenges that all of those things face. So yeah, it's going to where they are to provide activity rather than having them come to us as well. So I suppose an example of some of the stuff we've done is around the games we have for seniors, the senior adult games, senior regional games. And we held that in Masterton this time, which was really good from Papua and Masterton and Carterton. People from the South Wairarapa were challenged to get there for that type of thing, so we're looking at doing something that's another key closer to those communities in the future. So providing activity in neighbourhoods close to where people are, so that sort of local approach.
And that goes for some of the hard to reach clients
As well. Correct.
And are you setting targets around those spaces that you're feeding back to us on in the future?
We could do. We don't at this stage. Certainly the Well Wairarapa plan doesn't have any targets around the numbers engaged. Green prescription does have targets, and for green prescription we were slightly below the target, even though we had an increase on last year. So we can report on those numbers if you'd like. The Well Wairarapa is more about numbers of organisations we're connecting with at this stage of the implementation of that rather than individuals.
Councillor Beck, a question.
Yeah, hi, thanks for your report. I'm really excited to hear about your report that's due on the audit on local facilities. We often have a conversation around the table about should individual sports hubs be coming together to maximise participation. Are we doing our old assets when the demand's not there? New urban developments, do they have recreational facilities nearby in a place where there hasn't been housing before, those kind of things. So my question is, when will the report be ready, and is there an opportunity to work together with our planning division so that we're maximising the opportunities for recreation with people?
Yep, so the report's due mid-September, so we have 2 or 3 weeks away from being published. These reports are focused on sports fields and indoor courts at this stage, so no other recreational assets. And they highlight at a high level where there are gaps or issues, and the plan is from there is then to work with local councils or local communities to deep dive into that information and see what the solutions might be in those areas. So we're proposing that we work alongside council officers and others in the sporting sector to look at those challenges and see how they're best addressed.
Yeah, it's really good timing for us.
Yep, thank you. Councillor Moran.
Thank you. I wonder if you would tell me what your range and ages of people you touch, and also sex, also the disability and ability groups.
So we are right across the range. So we work in the play space, obviously. So that's from preschool through to high schools, Tamariki and Rangatahi. So we do work in primary schools, we do work in secondary schools. We work with community sport organisations, so right across those, and we have a focus on older adults through our ACC contract as well. So we do the full spectrum from one end to the other. That's the last question.
I wonder if you do anything for Kaumata.
Yes, we do.
And also males and females.
We don't collect stats on that, but we do have a focus on female activation stuff because they are underrepresented, so we do focus on that work.
Councillor Tim.
Thank you for your report. Just following on a little bit from what Tom said before, with the key initiatives or the KPIs, I guess, say for example number 5, workforce excellence, improving schools and pubs capability, and then we've got the assurance areas on the right hand side. I probably should know this already because I've read these reports before, but were those all deliberate things that you set about to do, or were they things that have just happened incidentally?
They are things we choose to do out of a range. So we're funded by Sport New Zealand for certain initiatives, and we can then choose out of those which things we focus on based on our feedback from the community. So the organisations we work with, they see that they identify leadership as an issue, so we do some programming in that area. So what we provide is a response to the local industry. But it's directed from Sport New Zealand, so we get funding with their initial events.
Thank you. Thank you. Any other questions? Thank you, Chloe and Marcus. Thank you for your report. Thank you for coming. Thank you. We go back to the agenda on page 62 already. Wow. We've got a couple of recommendations there. Do I have a mover for that? Thank you, Councillor Beeks. Do I have a seconder? Councillor Green. All those, no further discussion? All those in favour, please say aye. Next one we'll do is 6.3, destination Wairarapa. And thank you, Anna. Got that one right. Welcome, Anna, again.
Kia ora. Well, the highlights for the last year. We've had another good year, despite the last winter being a bit leaky. We've read in the report that numbers have dropped down compared to last year. So this is bearing in mind that over the last 3 years during COVID, we were particularly performing very well. But when you compare 2022 and 2023 winter, the numbers have dropped off. There's a number of reasons for that. A lot of it has to do with weather on the east coast, and Wellington having a particularly balmy, still calm winter. It means there's a lot of people who would normally pop over the hill in the winter period possibly aren't coming because they are quietly enjoying their own backyard for a change. Or, I don't know if any of you are the same as me, but I see everybody seems to be in Europe and jetting off to Europe or catching up with friends and family. And it's some people held off from last year when the borders opened to this year, and that's where they happen to be. Despite that, it was very pleasing. A couple of weeks ago, Brad Olsen from Informatics came and presented at the Business Wire Summit recently, and he did a really good deep dive into the economics of the country. And he pulled out a couple of tourism numbers, which was great. He said from pre-COVID, domestic tourism for the Wairarapa was up 24%, nationally it was only 17%. And in terms of international tourism, we were 27% above pre-COVID, whereas national was only 2%.
Wow, okay.
So we have done exceptionally well, and also I guess I should also acknowledge that as of this last financial year, it was the end of the STAP funding, the Strategic Tourism Assets Protection funding that came from the government on the back of Tourism MB. So we finished that funding as well. That's all been received by MB. They're very pleased with our progress, and I guess the numbers speak for it as well.
Thank you. Thank you, Anna. Any questions of Anna?
So, Anna, I might not have heard you, but our international tourists are currently up, but our overall numbers are down.
So it's when you compare last year to this year, the numbers are down. But over the last 3 years, during this COVID period, our numbers have been up. So if you compare 2020 to this year, then we're up 24% for domestic and up, is it 27% if I got it wrong, the other way around, 24 and 27. From 2020 to 23, but down from 22 to 23.
Anna, what's the availability of motels now? Is it getting any better or is it worse?
It's a hard one. It is doing the winter fluctuation at the moment where it does this.
Yeah, I was just sort of meaning with the other people in there through the year.
Oh, right. Yeah. The winter just has been challenging and it has been down. And saying that, as we've noted last meeting, all these motels down here have been full, and a lot of that is travellers or people working on the road. Certainly, most of the motels in Masterton have been full. South Wairarapa, it hasn't been chock-a-block, but that's the winter been, and that would have been a winter you would have seen before COVID. And the difficulty with COVID is we can't forecast, nobody can forecast what's going to happen in the future. And travellers, how they travel, what they're travelling for, is very different. And in saying that, all sort of indications are that what we have to offer, which is big skies, wide open spaces, quality wine, good food, connection with locals, that is what they're looking for. As an example, tourist buses, less people are wanting to travel in big buses like they did in the past. So the buses and the sort of capacity are getting smaller because they want to be more intimate, more specialised, more maybe even small enough for extended family or friend groups travelling, rather than a big bus loads that we used to get. And we didn't get many anymore.
Camp vans.
Yeah, they're more camp van friendly place now.
Okay.
Oh, I'm just going to ask, where's that additional money being spent?
From the government?
Well, compared to what we've got transactions for whatever, 150 127 million for 2023 compared to 125 million for 2019.
Yeah.
So
Across the board, but actually some of the best growth has actually been coming out of Masterton.
doing spend on accommodation,
Yeah,
cafes.
yes, yeah. The accommodation activities, food and beverage. Food and beverage is large. We don't have a lot of paid for activities, and that's half the problem. Is we have some accommodation, we have a good number of food and beverage, but as we've talked about before, the jewel in the crown here is Queen Elizabeth Park, out to Castle Point. You can take the little train ride for $1. There's the wonderful skate park. There's a lot of stuff that people can come and enjoy, and it's free, which is great. However, that means that our growth in spend is limited because we haven't got anything chunky for them.
What would they look like, those activities?
It's been things like packaging them up, and it might be, it's something that the travel agents do really well. You know, when you buy a package and it will be, say for example, to Fiji, and you get your food and your beverage and your accommodation and your transport all packaged up. And what happens is the things that may be of higher value to you may be at a low cost to the provider, and therefore you can, it's not broken down into little individuals, it's a whole experience that you're buying, not just a night's accommodation or a meal. It could be 7 days, 3 days. And those are the sort of opportunities, or it could be stargazing. So engaging with somebody local to tell them the local stories of the night sky that they can tell and share. Then you're spending money with a local person who's then going to spend money at their local dairy, etc., etc.
So it's more like marketing packages as opposed to one-off events?
Yes.
And then will you play a role in that?
Traditionally we haven't, because we're a marketing agency, but some of the money that we were given from MB recently was about product development, and that's the area that we're trying to explore with Dark Skies at the moment, to develop the product and lifting capability for operators to understand margins and understand the supply chain in the tourism market to sell packages.
Thank you. I've got Councillor Craig, then I've got Councillor Craig.
Yeah, thank you for your report. In the budget variance document, I see domestic marketing for the Wings campaign was $55,000. Now, that event, of course, unfortunately didn't take place. Do you see a continuing investment going forward in the next few months? And what level do you think that will be at?
That actually wasn't spent on the Wings itself, purely. What happened was, when the government came out and gave us STAT funding, we put it into our bank account, which is very simple, and those are the cost centres we used. A portion of that money was allocated to promoting events in general across the Wairarapa, and so that is an old accounting name, so it's the events, Wings, and we didn't realise we were going to get a second lot either, so the whole idea was it was going to happen for 12 months. If I, in hindsight, would have set up a completely different schedule of accounts with different names, so I apologise for that, because that is misleading. I apologise.
Councillor Tubb.
Thank you. Maybe follow a little bit on what Councillor Holmes was saying. With the accommodation on page 73, is the emergency housing taken out of those stats?
Yes. Yeah, I think over the last 2 or 3 years, there's a couple of properties. There might be 1 or 2 still in emergency housing, but they're slowly coming back, or half and half, which is a bit challenging in itself.
On page 77, under implications provided, you've got you secured funding for the development of my tourism strategy. Was that completed?
Yes, completed. We've been working with Joe Hayes and Ra Smith, and it was a strategy that wasn't developed for Destination Wairarapa to lead. It was in consultation with iwi, and it was done with Ngāti Kahungunu and Rangatane in conjunction, highlighting areas that if we can assist in whether it's the marketing, whether it's the connections, whether it's sourcing funding, that's where we would be able to provide assistance. And I believe that they, through the WEDS group, or the Economic Development Strategy, they're keen to do a Māori economic development strategy, and the tourism part of it will fold into that. Thank you.
Any more questions of Anna? Thank you, Emma, for your report.
Yeah, thank you.
So we go back in the agenda. We've got a recommendation there. Do I have a mover? Councillor Craig, seconded Councillor David. No further discussion. All those in favour, please say aye. Aye. Carried. So we go back in the agenda to 5.1 and non-financial reports. Thank you.
Kia ora, so this is the year-end Q4 non-financial report. So this is the information and results that will feed up into our annual report for the year. As you'll see in the report, I guess the highlights to note are that overall we've had a higher number of our performance measures achieved in this year compared to the same period last year. Probably the ones to note would be in that community facilities and activities area, in particular around utilisation, and that is probably reflective of the fact that we are sort of coming out of COVID and starting to see people going back and using those facilities in a way that is sort of more consistent with where we were at pre-COVID. Other than that, the themes coming through are fairly similar to what's been reported through the year, with weather sort of impacting in our waters areas, some of the challenges there being of note, and obviously the impact on our roading area too, just a higher number of complaints as we've outlined in the report. There are two measures that in the water space that we only report at year end, and that is around water loss and around the amount of water used per person. It's also something that we do at this time of the year is set the target for the following year. So we have also included in there a recommendation that we set the target at the level that was achieved this year, so that it's sort of like we're looking to maintain those results. So that's also outlined in the report too. And I'm happy to take questions.
Thank you. There are questions. Councillor David.
Tony, I'd like to see that 578 litres reduced. I think we need to encourage people about how to use water. And that's the figure that's been set this last summer when it was particularly wet. So I think we need to encourage people to reduce their use of water rather than. Thank you.
Yeah, I think it's an excellent idea. We spend a lot of money on water meters, which we've been told are already having an effect with us giving feedback into the network, and so I don't know the proper way to address that, but to put it in context, in 2018 it was 601, that's 578. 5 years later, I wonder if it's appropriate to take something like 10% off it.
At the time the measure was set, it was set at a level where we indicated we would review it as the water meters were implemented, and then the charging regime. The charging regime hasn't proceeded, just given the Three Waters reform and the change and uncertainty in that space at the moment. We didn't achieve the target in the current year, and that's why we're suggesting that we maintain a target of not doing any worse than what we did last year.
So the average is about 400.
I'd need to refer to our operational managers to check that.
Councillor Tom.
Thanks for your report. It says in here there were 2 occasions where large quantities of water were lost. Have those issues been resolved? And if so, isn't that a good reason to lower our target?
Yes, there was just a couple of operational issues that have been addressed.
So they have been addressed. And just like the others, for me, it's like we might not reach the target, but if we don't set a target, we probably won't reach it. So I'd be in favour of a better, improved target.
Councillor Cumming?
So yeah, probably for Mike. I'm almost certain the water development strategy in 2020, the average use was only just over 300 metres per person in the runner. Am I completely wrong with that? Because I thought Auckland at the same time was 150.
That may be a Wairarapa target. This is Masterton specific, but I think Mike would be better to.
You have that available, Mike? Do you want to just...
Sorry, the question only just came up now. I was what I thought.
Are we talking household equivalent units per person?
I don't know what I'm talking about, but I'm talking about what I thought was the average of the whole Wairarapa per person.
Yeah.
Yeah.
It was on the slides this morning.
I'm sure it was in the 300s, and I'm sure Auckland was 150 per person. And now it seems to be dramatically.
We can come back to you on that.
Probably come back to you.
Councillor Nelson, we'll clarify.
Yep.
Tony, on page 8, under the 3 quarters, the first bullet point, you've got 164 years worth by this year, compared to a total of 6 in the 2020-21 year, and then 61 last year. Is this a recent thing?
It's a lot of it's been driven since the February 22 rain event, where we had that big rainfall, and since then we've had high water tables. So every time we've had rain, which we've had a lot of in the last 18 months, that it's those water tables are high, so it's created those issues that we're aware of around wastewater in certain parts of our town. And those portaloos have been supplied to those people that are experiencing those issues.
But the problem has been for 10 years, so the people that the community has said water those issues just lessened, I suppose.
I think, like I say, it is around the weather conditions. So it's a problem when the weather's a problem, and it has been quite challenging weather over the last 18 months. Yeah, so that's accentuated the issue.
I wonder if when reporting these sort of data, it would be worth also referencing the community views results, because, and I know that's just a survey, but I see a bit of relevance to it. And in the past, I recall that used to be on top of, the water services community survey was there, and then your KPIs were there. It just sort of puts all the information on the page for us to look at. Do you think that's...
So we will be including commentary around the satisfaction survey in the annual report, but we don't have performance measures that are tied to that satisfaction survey.
No, and I'm just saying that for me, when I read your KPI responses, I suppose I'd like to see the community views survey. It's just...
I think there's two issues. One, it's not a KPI, and you set KPIs through your LTP process, which you're kicking off now from the discussions I had before this meeting. So if the council wants to see that as a KPI in terms of this community satisfaction survey, then the appropriate time to have that discussion is during your LTP, okay? Because all we're doing is we're reporting on what's going to go in the annual report, and Tony's already alluded to as part of the annual report. There will be commentary about the survey.
I mean, I hear what you're saying, and I wasn't really asking for it to be a KPI. I was simply asking for it to be reported alongside these sort of data.
We help them win that available?
We do it 3 yearly at the current
Okay, so it's 3 years, so it's okay.
We've just
don't want to get the results out yet.
Yes, they've been publicly released.
Okay, all right. All right, any further questions now? So if we can go back to the recommendation, we do have, are people comfortable with recommendation 2?
No, I'm not. I definitely want to see it reduced. I don't know if I'm qualified to know how much to reduce it by, but I'd like a discussion about that.
Well, the way to have that discussion is to move a recommendation and put some numbers in, Councillor.
I'll move a recommendation that we reduce the average consumption per capita from...
You need 2 resolutions. One is the real water loss and the other one is the average consumption. Both together, please.
Okay, I'll do the average consumption first.
No, you can do it in the order, otherwise we'll get confused.
The real water loss, recommended that be reduced to whatever the percentage works out on the number I'm going to give you secondly. I can't give you a percentage.
So what are you asking for?
I'm asking to reduce the percentage of real water loss by an amount that I can't quantify.
Okay.
And the
But I do have a number in the second part of the recommendation to reduce the average consumption per capita to no more than 530 litres per capita per day.
Well, are you just picking a figure though?
Yeah, I know.
Right.
You want a resolution.
I do want to, can I just, right, so what you're saying is you want to reduce it, right, I'll do the calculations, David is going to look over, it's actually 9%, right, so you want to reduce it by 9%, therefore you want to reduce the 32% by 9%, so that's basically you want to reduce the real water loss to no more than 30%.
29.
It's 29.75 to be
30, all right.
30,
Yep.
okay. And the average consumption target to be 530 litres, as well as we're actually going to receive the report. That's what you're moving. Do I have a seconder for that? Councillor Tim? Seconded that? Can I have some discussions? I think Dex, you will challenge the...
I agree with the intention to reduce average consumption and water loss, but just plucking a figure to me just doesn't make a lot of sense because this is based on information. So targets are meaningful if they're achievable or stretched or at least in line of sight. So I'd just be interested to hear what our staff say.
So would I.
If we want to reduce it.
Yeah. Can I just hold that, right? So the question 2 that I have, right, if we want to reduce those numbers, what strategies would you need to put in place to achieve that water reduction? There's no use saying we're going to reduce it by this number, but what are we going to do differently to achieve that? Councillor Craig's.
We'll find the leak in the pool at the moment that is losing us 50 litres per person a day.
Okay. I wonder, all right.
Would we not be better just to say we'd like to reduce it by 10%?
That's basically what
yeah.
Goodwin's done as part.
How did you, Tanya, can I ask you, how did you pick on your figure of reducing it initially from last year?
We had, in previous years, we've sort of targeted to be no worse than the previous year. With the average consumption, we didn't achieve the target last year, and therefore the suggestion was that we maintain the target from last year for the current year.
So it's down to education.
Yep. Okay. You speaking for your resolution, Councillor?
Yeah. One of the reasons I suggested that 10% is because since the election, we've had several reports from officers that, and I see it in the community, that they're using the data they're getting from the water meters, and it is reducing water use. And so, they're telling us it's happening, but it hasn't been quantified. So I suppose I don't know how a high jump person moves the bar. I just want to move the bar and, pick a number. I can't suggest a strategy to get there, other than what's been going on.
Mike, you've got got Councillor Tom, and then I've got, does Mike want to make any comment on that?
We're sitting at, Councillor, we're sitting at 578 HEU per person, litres per person per day, at a water loss of 32.4% from, which has been achieved from data, as Tanya mentioned. To pick a target to work towards I think will have to be greater than 10%, Councillor. It's...
I'm modest.
Pardon?
I'm modest. It's a low take.
Yeah, we can only recapture data and see where we tend towards. In terms of the water losses that we know, we got 32.4%. To tackle that, it's going to be a mammoth task.
A mammoth task.
We've got to have a target to work towards. Any pristine network would be sitting at about 18% loss. So to reduce it by half would take us by 16%, 15%. So I don't think that's achievable.
Yeah. Right, we've got a motion on that, right?
Yeah.
Councillor Tom.
Yeah, if I can suggest that, I don't think elected members, or I certainly are equipped to make a percentage decision, but I think there's a willingness to reduce water consumption, and I'm wondering if we hand that back to officers to come back to us with some options, and we can approve, assuming that there is a willingness to reduce the water consumption.
Mayor Gary.
Basically, repeating what Tom said really, I think we're playing guessing games here,
Yep.
and I think that's getting into dangerous territory, and I think if we just, if we ask officers to come back to an achievable target.
Yep. You've already spoken to the motion. I'm playing standing orders here because we actually got a motion on the table. Yep.
Thank you.
Thank you.
Yeah, this building. Just perhaps, Mike, coming back to us with those figures from the water resilience strategy a few years ago. Would be helpful as well.
Yeah. All right. We've got a motion on the table, right? So I'm playing by standing orders, right?
I just, the use of water this summer is going to be dictated by the summer we get. If it's dry, and I think that's 11% that we can't define the use personally for households and the use for water in gardens. So, yeah, I quite like the idea of achieving.
Okay.
I just wanted to add to the conversation, I just googled, in New Zealand the average person uses 227 litres of water per day.
Yeah.
So, and somebody said we've got quite high consumption.
Yeah, we have.
So anyway, any processes and methods we can put in place to reduce consumption, which we leave in your capable hands, that's what we're aiming for.
Can I just also clarify that the average consumption is based on the amount of water that we produce divided by the population per day. Is that correct?
Yes.
So if we've got a leak in we've already got a high water leakage. So therefore it's in both calculations.
Yes.
Right? So we've got a motion on the table. Right? Don't have an amendment at this stage. So all those in favour of the motion, which we reduce it to 30% and 330 litres?
No, it's fine.
530, sorry.
530.
530. Thank you. All those in favour, please say aye.
Aye.
I'll show of hands. 1, 2, 3, 4, 5. Those against? Motion is carried. Thank you. Next item.
Can we,
I thought we were
sorry,
going to
it's just some
go.
discussion.
No.
We don't have discussion.
That was discussion, sorry.
I beg your pardon, I had something to share, so I'm out.
Yeah, sorry. I said we're understanding orders, you already spoke, right?
Yeah, sorry, I was bringing up another topic that wasn't
Yeah.
related to that.
Yep. Sorry, I'm just conscious of time. We've got a rather large agenda. Right, next item is 6.1, our minutes. Do you want to talk about another KPI?
No, it was about stormwater and wastewater. But that's fine if you don't have that very help.
It's a question? Is it a question rather
No, it
than...
was a comment. I was waiting for the opportunity for discussion.
Okay.
Discussion seems to be around bridge resolution.
Yeah, well, it was, because we want, yes, okay, I will allow it, right?
Well, I would just like to comment that I'm looking forward, going back to page 8 in that document, to seeing from council staff and outline a specific process that will be in place to communicate with all impacted families in regards to the overflow of sewage issues onto their property. And I'm looking forward to seeing that process in place, and I'm looking forward to seeing all those families contacted and the assurance that they will be contacted.
Thank you. Any other comments? And sort of allowed Tim's, just so we've got an even playing field?
Oh,
Yeah.
on the last discussion.
Oh, no, on anything else other than the water one, right?
Oh, I would like to comment. I would like to say I have every faith in the process of council being given opportunities to go away, do the figures and come back with a suggestion.
I mean,
Which is
the issue,
where I thought we landed.
the issue is for me is it's actually, this is almost an LTP discussion, I think, and it's just for 1 year, so. Right. Okay, right, so if we now go back to 6.1, page, sorry, we done and dusted, yes?
Yeah, no, I just want to support Councillor Nelson.
I think he's made the statement, we're moving on.
Am I allowed to make a statement?
I asked before if there's any other one, I didn't hear it.
Oh, did you?
Okay, wait, I'd
like to say, or have it noted that I think most of the elected members support what Councillor Nelson was discussed this morning and agreed to. So,
Yes.
Right, so we've got next item, page 31, 6.1, the minutes of the 24th of May meeting, taken as read. Any comments, corrections? None. Do I have a mover? Thank you, Councillor Craig, second Councillor Bex. All those in favour please say aye.
Aye.
It's carried. Our next item is 6.4, our key policies.
So Narissa's actually,
Oh,
policy manager will
oh.
speak to this report.
Authority delegate. Welcome, Narissa.
What page are we on?
78.
78, 6.4. You take your, whose report, whose real report is it? Is it yours or?
Tanya's report. Tēnā koe Chair, o tira tēnā koutou ngā mema o tēnei komiti. The purpose of this report is to provide a status update of policies that are monitored by this committee. There are 9 policies of those that are currently monitored. Of the 9, 5 are current, 4 are overdue for review. All 4 overdue policies are scheduled to be reviewed within this financial year, with 2 of these currently underway. These are the asset management policy and the health, safety and wellbeing policy. With regard to the fraud and sensitive expenditure policy reviews, we've had some changes to resourcing within the policy team, with 1 resignation and another going on maternity leave. Our maternity leave cover started on Monday, and we're currently recruiting to replace the vacancy. So once that resourcing has been sorted, I'll allocate the fraud and sensitive expenditure policy reviews to one of them. Of the 5 policy reviews that aren't overdue for review, the revenue and financing policy and the significance and engagement policy will be reviewed in this financial year. The report also provides an update on other policy reviews or policy development currently underway. One amendment I have in that particular section of the report is I reported that the lease policy will be coming to council for adoption in September. It's more likely October now. I've also included a summary of policies adopted or approved in the past 6 months. That's my summary, Chair. Happy to take any
Thank you.
questions.
Questions? Councillor Tim?
Thank you, Larry. So what's the, is there a process or a policy for issuing policy review? If you see my point, like there's four that are behind, what's the actual the process for reviewing them? So how do they define?
Do you mean scheduling them?
Yep.
So we just prioritise as part of the annual plan process, and when we set our work programs at the beginning of the year.
So you're confident that the plan for the next year will have all these up to date within the time frame?
The ones that we've set, yeah.
So there'll be none in red?
No, there'll be none in red tape.
Okay, right. Any other questions? Carl, I've got a couple. To be honest, you might find this bizarre, right? The fraud, dishonesty and corruption policy and sensitive expenditure policy, we're going to get a black mark from audit for not having them up to date anywhere. So to me, as long as they are, I think that's where it's come from. It's probably audit.
Yeah,
so,
it is.
Right, rather than actually being fundamentally wrong with the policy. So to me, I think that's correct. It's a low priority, and I'm comfortable with that. I'm not saying I totally agree with it, but I'm comfortable with the workload. I just want to talk about the asset management policy on the basis that that's quite critical, I believe it's quite critical, for the LTP around the standard of asset management plans for which then are created as part of the LTP, which will then get assessed by audit and potentially may cause some grief as part of the LTP audit. And I just wanted to say the review's underway. When can we expect it?
So we're working on a revised draft at the moment.
Yep.
That will need to be reviewed internally. I'm hoping by this side of Christmas, but I'd need to check with our lead who's reviewing this policy.
Can I suggest we've got a meeting, you said this side of Christmas, which lines up almost nicely. We've got a meeting on the 15th of November. It would be nice to have that policy done and dusted and ready to go for us to consider it, so we can actually then take ownership of that.
Yep.
Okay.
Can I give that to you?
Yep. Okay. Councillor Goodwin?
I wonder if the October election will influence the direction we want to go on some of those issues. And I'm not disagreeing to have it ready for them, but it just obviously the three waters, 10 waters, whatever it is whether it's in or out.
Comment?
No comment to make really. The current asset management policy that we have in place is really high level, so I don't think it will be impacted significantly by whatever happens with the reforms.
That's my understanding. This is actually the standard to which all asset management plans, irrespective of whether it's water, roading, parks, reserves or anything else, this is a standard to which the asset management plans are actually written to. And that, so whether water's in or out doesn't make any difference to the policy, okay? But who knows what's happening with waters, and that's why I was sort of a bit bemused by the previous comment, because we don't know what's happening with the three waters. By 1 October next year, the three waters could be out of our control. Right. So, okay. No other questions. Thank you for that. So we go back to the recommendation on page 78. Do I have a mover for the recommendation? Thank you, Councillor Tom. Do I have a seconder? Thank you, Councillor Craig. All those in favour, please say aye. Aye. It's carried. Next item, 6.5, page 83. Mr. Paris.
Good afternoon, Chair. It's a series of reports in the August meeting that summarise the year-end position. So we're 12 months in a financial year-end, so slightly more significance than the previous quarterly reports. So the 30th of June this first report is the Treasury, so investments and borrowing that the council has in our balance sheet at our financial year end. 20.42 million funds on hand versus last year of 23.98. So there's a graph on page 85 that shows that the proportion, and that the graph indicates a decline from the last 3 years, from 35 million down to 20 million. That's a reduction in the real cash money that the council has on hand for a number of reasons. At the 30th of June this year, we have a large debtor amount from Waka Kotahi for roading subsidies. So we had spent the money, but they hadn't paid the subsidy. So that's one reason why we didn't have as much money in the bank. But also the last LTP included a provision to underfund rates and borrow from internal reserves and look to repay it in future years. The rate smoothing, we called it. So that is a gradual decline in the investment funds we have on hand because we reduced the rates increases in the first 3 years of the LTP. And that's having a real impact on the dollars we actually have in the bank and in our reserve funds. And yeah, there's still $20 million there, but it becomes clear after a couple of years of that the declining balance. The external debt is 51.7 million. The projection in year 2 was 55.2 million from the annual plan. So we're about $4 million less than what was in the annual plan due to a number of projects not progressing, the airport probably being the main one that was debt funded or proposed to be debt funded, and we haven't had to borrow that money. We did borrow $4 million this year against new projects, and most of that is in the wastewater area. The other thing I wanted to point out was that attached to this report, there's a lot of detail in the report, and you can read it at your leisure. The compliance reporting, there's nothing to report in terms of non-compliance with any of our Treasury management policies for the level of cover for fixed versus floating interest. And I have included a paper from the LGFA as an attachment to this report, where they've explained in as simple terms as they can do the borrowing structure and how councils borrow from them and what their debt and their security comes from, and what council's debt and security comes from. And I believe this paper was prompted by some misinformation that's been circulating online about people's homes being under threat because councils are using our ratepayers as guarantors for the council debt. So in reality, councils do pledge the debt to be repaid by the ratepayer base if we default on the debt. That we don't pledge our assets because the underground assets and roads are not assets that lenders want as security. So the mechanism is to have a debenture trustee that effectively gives the lender the ability to go to our ratepayers and ask for the money back if we default. But the LGFA is also in between, and we borrow from them, and they have all of their member councils are guarantors, so they would be asked to pay first before they would come back to us. So it's explained in the paper. And really, it's just if you get questioned about it, and the Mayor has passed on some people to me who came to me with real concerns because of what they'd read online, and I was able to put their minds at rest, that the councils are operating prudently and using established debt funding mechanisms and borrowing mechanisms, and not putting people's houses under threat. People don't need to be worried. Yeah, that, I suppose that would be the basis of my report.
Through the chair?
Yes, sure, absolutely. Yeah.
Has the council ever defaulted?
No. No New Zealand council, as far as I'm aware, has ever defaulted on debt. I'm not old enough to know that.
You could lose your job once.
No, yeah, Thames Coromandel in the Depression defaulted for a short period of time.
But we're not Orange County.
No, I mean the issue is that it's highly unlikely that any council would default. Couldn't remember who got their hand up first. Was it? We'll let ladies go first.
Is there any reason why Westpac, ANZ and Society are the only ones that we have this year, or is it just that they've got the best rates?
The best rates at the time when we have funds to invest, we look at what the current deposit rates are that on offer from those banks, and we'll choose the best interest rate as long as we stay within the the investment limits. We can't go above 8 million with any one bank. So yeah, we try and some banks have better rates, offer better rates on a regular basis than others.
Yeah, well, I was just curious why I asked, because the government run an employment society. I think maybe we just
we do have a limit of which we don't go over in terms of WBS, because they have a lower level of security or credit rating. But yeah, we do support the local building society.
Councillor Tom.
Just through the chair, this is going to sound really late question, David, so bear with me. With the $51 million in debt and the possibility of losing that $40 million in debt, is there any reason why we wouldn't use the $20 million to pay off all debt and operate without debt as a council?
We've looked at it many times. As long as it's prudent to have money in the bank in case of an emergency, to be able to use it straight away, or have it on investment that can be turned into cash quickly. And as long as the interest rates that we're earning on those deposits are close to the interest rates that we're paying on the debt, there's very little cost to holding the debt and having money in the bank. Is that?
Yeah. I mean, and you're not a rated council, right? So when you don't get a raised credit rating from Standard & Poor's or from the other ones, but anyway, they always the credit rating people bizarrely look at what your liquidity is, and the more money you've got in the bank, the better the credit rating. So they would, you're probably at a lower, your debt's not at a high enough level to go for a credit rating. You probably need to be over 100 in my books. The issue then is, because of that's the principle which the experts use, we also should actually be following those principles as well. Now, I can give you a real life example. I know we're live stream, right? But Wairoa Council had to borrow $5 million at short notice to pay for the recovery work because of the slowness of government departments in actually repaying debt. So then they're going to have to repay it because they had no other option. Right? So that's why you need money in the bank that you can call upon without actually going Right? So that's actually going to cost them more because of slowness of government departments.
But would these be sometimes the same experts that led to things like the global financial crisis? You know, we talk about experts, sometimes the advice we're given from these people isn't the best advice that could be shared. But, I was just kind of thinking, if we operated as a council with still $10 million in the bank, and then we're only spending according to what we actually needed. This is just the philosophy that I'm thinking about, as opposed to buying things that we might think are really nice to have.
Can I think really good idea for discussion, but not for now. That discussion should be part of your financial strategy. And you will need to have your financial strategy discussed, because if the water reform happens, then as you rightly say, a lot of our debt disappears. So then what does the financial strategy of council then look like without the three waters?
As does a lot of our revenue.
Absolutely. Oh yeah, there's no free lunch. Yeah.
My next question is about corporate bonds and Fonterra. Yes, I want to ask, do we go get their bonds because we're a farming community, or why? Just based on rates?
Yeah, it's an investment and returning a good return, a good interest rate. Is why we've held that for a number of years, and we used to have more corporate bonds invested in. This one actually was a perpetual, so it just kept rolling over, but they redeemed it this month. So they've given us back the 60,000.
Right. Sorry?
They might
need it back again. Councillor Craig.
Just a question. Who is Civic Financial Services Limited, and what benefit do we have having shares that pass no dividend?
Because you asked me to answer this one.
They're an organisation that was set up by local government, so that obviously councils were issued shares or invested shares in the entity. They have provided superannuation services to council staff. So they run a KiwiSaver scheme, they run other superannuation schemes, and that's been their primary thing for many years. They ran insurance for a number of years, so they were an insurance provider, and they sold the council's insurance, and they're out of that now. They ran Risk Pool, which was one of the liability insurance providers, and they were stung quite heavily by leaky homes, and have had to call on member councils a number of times to settle the legal cases that revolved around the leaky homes scenarios. That's virtually come to an end. And they have run the Local Authority Protection Program, Underground Asset Disaster Insurance Program for a number of councils for many years. And again, that's coming to an end. Aon have taken over that process. So now they're basically an insurance provider, so a superannuation provider, and very small. But we still are a shareholder. They sold the local government building that they owned in Lambton Quay Terrace 2 years ago now, I think. They've put some assets, and we got a payout for that.
I think, to be fair, David, the reason too is that you've got them is because no one else wants to buy the shares.
They're not a saleable share.
They're not a saleable share, and only local authorities can actually hold them as part of the constitution. So you'd have to find someone else who wants to buy it.
And there would be no willing buyer at the moment,
Don't know.
Sounds right.
They're probably shareholders as well.
Most councils, and it basically came out of, it was pre-reforms, right? So it's a historical, it's a legacy issue, yeah. I think every council's got them to a greater or lesser degree.
If they're a legacy, why do we have them as a value now?
They have a value because they have assets. so that's our share of their equity. And I'd like to see them paying a dividend in future too.
They used to pay dividend. It was quite a healthy dividend. Once upon a time.
Once upon a time.
Yep.
Thank you.
If you break an investment, it'll cost you too.
Oh, absolutely,
You
absolutely.
mentioned before about how you...
Oh, yeah, absolutely. And, you know, yeah, yeah, absolutely, totally understand that. But, you know, when you've got...
I appreciate what you're saying.
Yeah. Right, any further discussion on our Treasury Management report? So we go back to page 83. We've got a recommendation there. Do I have a mover for that? Thank you. So it was Tom and David. Any further discussion? All those in favour, please say aye. Aye. It's carried. Page 92, insurance update. Thank you again, David.
I'm sure it's riveting read, insurance updates, but I did promise this report when last Audit and Risk Committee we discussed the our insurance brokers' problems actually placing the insurance cover or getting full cover across the council's assets. So I've reported here that they successfully placed that insurance, and we didn't need to consider the options around self-insurance on any level of our insurance program. But the trade-off is higher values of our assets insured, so replacement values are going up based on the inflation and building costs, and insurers are taking a more conservative view. They're making greater losses, so their premiums are increasing. Globally, we're talking greater losses in fires and hurricanes, particularly in the US. So the premium increases for the material damage at 27.5%, for the lap underground assets 44%, and the professional indemnity at 40%. So those insurance premium increases are in excess of what we allowed for in the budgets in the current year, of close to 80,000. So that's a challenge to try and stay within budget in the current year.
Councillor Goodwin.
Which is which company is covering the DHB claim?
The claim was lodged or notified to our insurers in 2017-18 year, as far as a notification of the potential of a claim arising. We didn't actually get the statement of claim from the DHB until 2020. So the insurer at the time that the claim was received was Jardine's Global, which was an amalgamation of Jardine Insurance in London. So there's several insurers in London who covered a whole lot of Jardine clients in Australia and New Zealand for professional indemnity and public liability insurance. So it's an overseas offshore insurer based in London. That's a short answer.
Tom?
Yeah, in terms of one of the reasons for that 32% increase is an increase in liability claims against councils. Is that, do the insurance companies do that determine that 32% by looking at all councils, or is it specific to claims against our council?
A bit of both. Claims against all councils are increasing in that liability space, and the councils are seen as being ones who have deeper pockets, so they're challenged more often in various cases, or pulled into disputes with engineers or builders, and councils are also pulled into the claim. So then the insurers incur legal fees defending it, even if it doesn't go to court. But in our case, our premium is more because of the history of claims against this council.
Councillor Beggs.
Question and point as well. I get really angry with the cost that insurance is. You know, it works out to about $140 per household for our insurance. It's gone up 53% in the last 2 years, and it's like being held hostage. And the other thing is your professional indemnity's gone up 5 times what it was. It's obscene, but the question, I am leading to a question. The question is, we insure for replacement values. And yet,
95%.
I would say that if something happened to some of our assets, would we replace them? So whilst I appreciate that you looked into if we reduced or increased our excess and we're a bit more, took a few more risks, would our premiums reduce? They wouldn't. But my question would be, should we really insure almost everything for replacement value? Because would we replace it?
It's a question I think the council needs to consider on a line-by-line basis. Rural halls, for example, that are underused.
Some of our community facilities we're hanging on to like grim death, but if something happened, would we replace them?
Can I just provide David?
Oh, that's for another day for discussion?
Absolutely. I have been. No, I'm serious.
I know.
The issue is, I've been involved in the council that's done that, on the other side, somewhere else. It took 3 workshops, meetings before they were able to actually consider what the appropriate level of insurance was going to be.
And risk.
Oh, absolutely, and risk.
Yeah.
Now, they've taken on significant risk, and they have said, we're going to, you're sitting down, take on the first 10 million in liability to reduce the premium down to an acceptable level. Now, they've done that with their eyes wide open, and it had to work with the insurer, because very well just to say, we're not going to replace that building, but we want it to get indemnity because there's cost of demolition, all sorts of things. So there has to be a process where the insurer is also aware of the change in risk profile for them as well. It's not to say we're not going to insure it, because there's still other costs as well.
It's just that we get beaten up all the time for our rates increasing.
I know.
But when you turn around and say, well, our insurance has gone up 53%, there's no one else we can pass that cost on to.
And can I make a political statement here? In terms of the leaky homes which has led to this, we are the last people standing. And at the moment, the government don't really care to give us any protection about the fact that we were 2% liable, but we end up with 100% of the cost. That's the fundamental problem.
So,
Yep.
Thank you.
Thank you, Councillor David.
I was just, well said, Bex, and our personal insurances have all gone up too. Starting across, they're the medical insurer, is that correct for the staff?
Yes.
Okay.
I'm sorry, I've gone right back to page 38, because to look at the insurance. This is, you talked about presented by the manager findings. Who's the manager of findings?
Me.
And who's the CFO?
Me.
He's schizophrenic? Sorry, it's not fair.
No, but I think it's sometimes confusing, when you've got 2 titles.
Yeah. I don't mind what I'm called.
Superman.
Not late for dinner though, eh?
No.
Right? Yeah. Okay. Right. Oops. So basically we've got a recommendation that, wrong report, that we receive the report and notes the information regarding council's insurers. Do I have a mover? Mayor Gary's, second Councillor Goodwin. All those in favour please say aye. Aye. Next item, rates receivable. 6.7, page 96. Don't like your graph.
The,
Talk to that one.
the graph, the two graphs on page 97 pretty much tell the story, although I have given you that in words. 745 properties with arrears, that's up from 507, so that's a reasonable increase in the number of properties. The average arrears figure is roughly the same as it was last year, but as a percentage of the total rates income that we levy, we've gone from 1.3% last year to 1.7% this year. So in the graphs, the number kicks up in the last year from the average that we've had of about 1.5% for the last 10 years. So it's an indication of the economy being tougher, people finding it harder to meet their obligations, and paying rates is one of those obligations for property owners. It's an indicator. It's nothing to be concerned about at the moment, I don't think, but if the trend continued into the 2% plus range, it would start to impact on the council's working funds, how much we have to actually spend. If we've got a large amount of unpaid rates, we would struggle to pay our bills. So we actively work to keep those rates down, the rates arrears down, the rates coming in the door, people paying.
Councillor Tubb.
Thank you. Do we meet with these people? Do they tell us, do they give explanations why? Because I'm just wondering.
745 properties.
Yeah, but I'm wondering, like, is there a pattern of these people who are refinancing their mortgages? And I'm assuming that more people will be doing the same thing, and the problem will grow?
There's a mixture, really. Some people don't have mortgages, and the reasons why they haven't paid their rates are their own personal reasons. But the ones with mortgages, we contact them and then contact their mortgagee, and they are required to pay the rates, because part of a mortgage contract is that they have to keep the rates up to date. So yeah, there's a whole spectrum of issues that people have, and I suppose we work with them to try and make sure that their finances are structured in such a way that they meet their rates obligations along with everything else. So if they need to be on a payment plan to get back up to date, then we work with them on that.
Councillor Peets.
I just had a question. I noticed that there's been a 15% increase in rates rebates, which I thought was fascinating, because to me, is it because more people are applying, or is it because people's incomes have gone down? Have we done extra marketing this year for rates rebates? Is there,
We haven't done anything extra. The 15% increase is as at the same time last year. So more people have come in and got a rebate before the first instalment's due this year than in previous years.
Because it's means tested, isn't it?
Yes, they have to declare their income.
It's just a significant increase in the number of people applying for rates rebates, which I thought was, there could be, I just wondered if there was another reason, but obviously not.
Not that I'm aware of.
Okay.
Councillor Goodwin.
I did see a newsletter from Ratepayers Association
encouraging.
Promoting that. So I don't know.
I just wondered if it was more widely known that there was that facility. Okay,
Councillor Craig.
I note that you've got legal process underway with 7 properties. Is that normal amount, or is that?
It is about normal. It's not any more than usual. Yeah.
Mr. Paris, you're going to not like me. On that graph one that you referred to on 97, you've got the little graph showing prior years, this one here. The question I have is that's the real number, because that to me is someone who's behind more than 12 months.
Yes.
Is that number growing? It's really hard to tell as a percentage, because we've got percentage of overall rates, but that to me is the how I refer to it as the more challenged people to pay their rates because it's greater than 12 months outstanding. Is that number? And I'm not expecting to know the number off the top of your head, but I think in the future, if we're seeing this trend going up, that would be an added.
Well, and the numbers is 53,000 last year. It's 57.
Yeah, but as a percentage, but the number of properties as well.
Oh, number of the number of properties that make up that. I've analysed the numbers of properties based on how much is outstanding, and if the average properties rates is around $3,000, there's not that many properties with more than a year's rates outstanding.
No. It's actually when you it's the 4 and 5 years when we're getting to that statutory bad stuff that starts to make me panic.
Yes, and we know them. We have a regular relationship with with contacting them and trying to convince them to meet their obligations.
Okay, thank you for that. So if we go back to page 96, we've got a recommendation there. Do I have a mover? Thank you, Councillor Craig. Seconded, Councillor Beggs. All those in favour, please say aye. Very short interim financial report goes from page 99 to 100, but no,
there's a separately circulated
that's
one on Monday.
Yeah, that's the one thing. Yes, it was Monday. Thank you. Tongue in cheek there.
Apologies.
Has everyone got that?
The late delivery of that report.
Yep. Thank you.
Is it a separate report in the?
It's in Stella Library.
It's in Stella Library.
It's not the one.
It's not the one that's been tabled today.
Yes.
No. It was.
Anyway, everyone got a copy?
Is that the interim report?
Yes.
Yes.
Yeah. It's interim financial result. Yeah.
Yep. Okay, David.
So this is very much interim. It's the first cut of the numbers. There's still reconciliation work to be done. There's still checking, but it is. It's the best information available right now, and I suppose highlights would be that the roading expenditure total hides a lot of things. In the number there, that's 7.8 million rates required. We spent a great deal more than that, but we got significant Waka Kotahi subsidies. I think there's another $11 million $8.9 million of spending on emergency response to storm damage. Some of which was at 77%, some at 97% subsidy. Our share of the flood damage costs, I've noted there on page 104, that we now have a flood damage reserve fund in arrears by 1.6 million. Now you'll remember that the annual plan, we allowed a $500,000 extra rating to go into that fund to bring it back into positive. We're going to need 3 years of that to bring it back. And we've got Kane's roading program of $18 million of spend this year on storm and flood repairs. And the annual plan assumes that will be, our share of that will be loan funded. Rather than, this effectively is borrowing from ourselves, whereas the annual plan in the current year we're borrowing externally for our share of that work. So the financial statement in terms of rates overall doesn't really reflect the impact of the roading spending. But by drawing on reserve funds, we're balancing the rates required part of that. In the water and wastewater operating expenditure, we can't draw on reserve funds, or we can to some extent, but at the moment I've reported those as both being overspent, and I've got a recommendation in terms of looking for some ability to draw from reserve funds to make up the deficit.
So recommendation we don't account.
Yes. Yeah. So in the commentary under water, the maintenance and repair of water mains and connections is tracked well ahead of budget provisions, and response to customer service requests where someone reports a water leak, there's water bubbling out of the footpath or whatever, our contractors are required to go and fix that under their service level and our response times. There's just been more of that, and it's cost us more than what we budgeted. We've had unplanned costs incurred in cleaning up storm damage around the Upper Plain Reservoir. Trees came down and needed to be cleaned up and fences repaired. Increased usage and prices for the water treatment chemicals. So when the river's dirty, they need to put the PAC chemical into the clarifier tank to get rid of the cloudiness in the water, because the cloudiness is coming through the river. The cost of that chemical to remove that cloudiness has blown out in terms of budget. So I think we've spent 180,000 and the budget was 110 on that particular one chemical. So the weather impacts more than just damage, it's actually impacted the cost of delivering a water supply service. Higher interest rates have impacted that water blowout cost, and unplanned expenditure on tracking down water losses on the trunk mains. There's been a number of occasions when the staff at the water treatment plant believe there's what they're sending out of the plant that's going into the reservoir. There's water coming out of a pipe somewhere on the trunk main between the Kaituna plant and the Upper Plain Reservoir. So we've spent money trying to track down those leaks and have found several, but it costs money. And that's another reason for the overspend in that area. And in wastewater, you'll know the Portaloo issues through the storm events. The extra interest in the wastewater because Homebush has a large amount of debt associated with it, because we've paid higher interest this year as rates have gone up. We have spent more than budget on wastewater. I think if you've had the opportunity to read the report, I'm happy to answer questions, otherwise I can go through more detail.
I think that's a high level. Councillor Tolan and Councillor Goodwin.
Yeah, thanks for your report, Manager Harris. Those trunk main leaks and the other leaks you referred to, is that just age of our system?
Yeah, I think there's no asset people here.
No.
The large pipes, the trunk pipes, are steel, and some of them have been in the ground 100 years. They are still in good condition, but there are parts joints that wear out.
Joints.
Yeah.
And the water bubbling up from the footpath, it's just old pipes, is it?
Old pipes, yeah.
And when we do the network, when we eventually get that network complete, those things will...
Yeah, we're replacing mains in streets, and we will generally replace the lateral from the main to the Toby, if there is a renewal of a main, everything's renewed in that street, but we're progressively working through the town on that.
Councillor Goodwin.
That 110k extra chemical, is that the blockading agent? And that's good news about all the water works to improve leakage, and given what we voted on earlier, do you feel sort of vaguely comfortable with some false natural ends?
I'm not sure if I'm qualified.
I'm going to spring to the officer's defence here. That's a completely unfair question for him to play asset manager. It's like you saying, I think National are going to win the election hands down on the 14th. Are you qualified to make that statement? Right, moving on. Any other questions on the financial statements? David, sorry.
Just a comment that, there's always ups and downs, but most of the downs are actually reflective of the weather.
Yep.
Out of our control, acts of God and all that. You have good years and you have bad years.
Yep. And the economy.
Yeah, David, one thing that I wonder where it comes into these reports is that it is, quite a few years ago we smoothed our rates, our rates over, I think it was 10 years, wasn't it, to cover a large rate increase.
Yeah.
When did that come to an end?
The use of reserve borrowing from ourselves was included in the first 4 years of the LTP, and then the outer years 7, 8, 9, 10 we built into that, increasing the rates to go from 3% rates increases in those years up to 5. Whether that plays out, it's highly unlikely to play out, because every LTP there's a different set of circumstances, and we still, the annual plan that we adopted 3 months ago still includes some level of funding from reserves to keep the rates increase down.
And will that continue on?
Well, we've got an LTP to start work on in a month or two, and that how that lands and whether we can carry on or we need to carry on we'll have that in front of you. We will certainly present a budget initially without any additional borrowing from reserves, or using reserve funds instead of rates or other revenue. But if that lands at a 20% rates increase, then we need to look at ways of bringing that down and making that acceptable in our community. And one of the tools we've got is that reserves funding and smoothing rates, and that's part of the financial strategy that we'll look at in the LTP.
So Councillor Beverley and Councillor Clark.
Just two questions. One to you, Mr. Chair. Is it quite unusual for councils to smooth their rates with the reserves? And the second one is to you, David, in that, from my memory, it is unusual in this council to do that. And what was it in response to some large price increase, something or other, some sector expenditure?
So I'll answer first. It's not normal, but it's not unusual. I have recommended and been adopted by councils that I have previously worked for. The issue is you've got to look at the reason for doing it, which Mr. Paris will answer shortly, and you've got to have a clear plan that you're actually not digging a hole for yourself into the future.
So when you've seen that, I mean, it's interesting to hear because you know other councils, when you've seen it, it isn't an extraordinary thing, a spike.
It's a spike that's a one-off, that's just not going to be repeated in subsequent years. So it's not putting off the evil day, it's actually spreading an event or a one-off cost that would be unfair on the ratepayer to see that increase specifically in 1 year. Mr. Paris?
Well, the LTP in 2021 had the whole range of council services included in it, but it had a civic centre proposal that had capital expenditure in years 1, 2, 3 and 4 to build the civic facility, and it was borrowing required. It also had an airport project, and the new debt was increasing rates, inflation was increasing rates, so the initial cut saw 12% in year 1, 11% in year 2, and the council and year 7, 8, 9 had 3% rates increases. So the council's view of seeing that graph was let's move that, let's try and give the ratepayer base some indication of a consistent level of rates increases over 10 years so that they can plan on that basis.
I don't remember that. There might be a good explanation. Debate surfacing, out of council. Was it openly debated? And I suppose the only other cost that increased quite a lot was these personnel costs and that. But did that debate happen in public or private?
I don't recall. It was part of the development of the LTP and the financial strategy. So,
in my view, that strategy should be your financial strategy. We've already talked about that's going to be debated, re-debated. Mr. Paris said starting in a month, so that's the appropriate time to re-look at that process. All right, I don't think we can solve it as an Audit and Risk Committee. Councillor Tom.
Yeah, the current reduction in reserves seems like it's a bit of a worry to me. Given the current, like roading reserves are almost down to zero,
the flood damage is negative. But
yeah. Given the current level, how concerned are you, or how does that compare to other years in this council, and how concerned are you about that?
It's
are you concerned? Yeah.
Only to the extent it makes it more difficult to manage the cash flow and work out how much to put on deposit and for how long, and whether we need to have funds on shorter term to have that available. So we have quarterly funds coming in terms of rates instalments. So this week on Monday we had the first instalment was due. $10 million arrives in our bank account pretty much. Most of that instalment is paid on the 20th. And then we've got to eke that money out for the next 3 months until the next one. And balancing the cash flows, when we've got some money on investment, we're more likely to put less money on investment and keep it shorter term in case we have other funds needs that we're not able to plan for.
Okay. Any other questions?
So it becomes kind of, but really serious when we don't have those investments and we don't have reserves, then we'll start panicking.
Yeah. But some of the reserves, for example, the depreciation that we've put aside for bridges over many years, we've utilised our share of the Colombo Road Bridge project on that. So 1.8 million we've drawn out of our reserve funds, our depreciation, and paid for that bridge, along with Waka Kotahi's share. So none of that has come from current year's rates. It's all previous year's rates that we've put aside depreciation on. So that's how they work, how they should work.
It's going to limit what we can spend money on and limit our ability to avoid using rates in those spaces.
Yeah.
Councillor Craig.
Just trying to get my head around this rate smoothing side of it. So we have pushed out rate rises, and because we wanted to build and borrow money for two programs, yeah, the Civic Centre and Hood.
Well, they were two that were new and requiring new debt,
Yeah.
but we're also doing wastewater and water renewal programs. Everything else the council's doing is in the mix as well, but those two were additional.
Yeah, additional, and we've smoothed out these rates for a 10-year period for something we haven't actually done.
But you haven't borrowed for it as well. So I think, look, that we're not a finance committee, right? That's the job of council. So, sorry, Mayor Gary, right? I'm going to pass that one over to you. But I think it's the discussion again, I think is really important about your financial strategy. And so, David, I'm going to throw you under the bus a little bit. Part of your discussion about the financial strategy should be talking about your last financial strategy, what were the key messages and how well that worked. So that to me is the opening gambit. I think it's a really good debate to have as we had this rate smoothing. Why did we do it? What's the impact? What are the consequences on the decisions that we need to make going forward? I'm not trying to shut the debate down, but I think we are not the decision makers, right? We're just monitoring, and I think that's the issue. Any other questions? David, I don't remember seeing, you've talked about the annual report, annual audit of the annual report starts on the 25th of September. I haven't seen the audit engagement letter, audit plan or the audit fee letter. Is that still to come, or has that been signed off by a higher being?
Yes, the mayor.
Okay. Okay, all right.
The audit...
Sorry?
I just sit next to them, and I like to hire a big man.
We have had an audit proposal that came in a month ago, and we have had discussions with the auditors about that and agreed to the fee increase rather than, and it needed to, it was 3 months late.
Oh, really?
To start with. So it needed to be signed off so that they could actually get underway with an interim audit. But yeah, it's a 40% increase in fee from the prior year, which is a lot less than most councils, from what I understand around the country, in terms of the increases in audit fees that they've had.
Yeah.
When did it was mentioned earlier about the auditor putting a couple of black spots on, I don't remember what it was now, on something or other we did, and I'm just curious that didn't come out for the last thing. When did the auditor?
We've received the audit management.
Done this one.
The audit letter, the report on the last audit has been received by the council.
By the committee?
Is that the one we get a copy of?
Yeah.
Yes.
Yeah.
But they didn't mention that, did it?
Didn't mention
what?
The next.
Brent's referring to the two policies that you referred to that hadn't been.
Yeah.
Yeah. So that's what Brent's talking about.
What were they?
The sensitive expenditure and the fraud policies.
Yeah.
So the review of those policies. One of the items in the audit report or management letter is that our sensitive expenditure policy is out of date and needs review. And they identified that it, when they come back to audit next time, they'll be looking for that.
We discussed that today.
We do, yes, that's right, yep. Okay. All right, okay. All right, I'll talk to you separately about Karen. Okay. All right, so no further discussion. We've got a recommendation that we receive the interim financial results and the commentary for the 12 months to 30th of June 2023. Councillor David is going to move it. Do I have a second? Councillor Craig. Any further discussion? All those in favour, please say aye. Before you all get excited, we've got a supplementary paper which has been circulated. Do you need 5 minutes to read it? Or shall we take an adjourn for 5 minutes so people, the speed readers can read it, and those who need to stretch their legs and go a bit taller can do so. Okay, thank you. Okay. Right, let's reconvene. Tanya, your report, can't take it quite as read, so, but LTP update, thank you.
So we agreed that we would do a quarterly update to audit and risk on how we're tracking and progressing with the LTP project. So this is just an update report since what's been progressed since May when we last reported. You'll recall that the committee endorsed 3 priority areas, which was the revenue and finance policy review, levels of service review and budget review. So the report is primarily focused on those areas. As Council will be aware, we've had a number of workshops over the last 3 months, well not over the last 3 months, but since the last report 3 months ago, to progress work on the revenue and financing policies. So the report just outlines some of the considerations that we've been talking about. And also levels of service review. So we've been talking about at an activity level, our current levels of service and sort of considerations for council as they move into the LTP. Our budget review is not far off kicking off, and so that will be the next big piece of work for staff across the organisation to be looking at the budgets for the next 10 years as well, which will incorporate sort of the discussions and the STEF that we've had so far. Obviously they will all come back through council as that's part of that process. It's also a note to the policy work, which some of it we've already talked about in the earlier report, but just noting the asset management policy is also the reviews in progress along with our revenue and financing, and just updates on some other aspects of work. The environmental scan is in its final draft state and is almost ready to come out to council. Our forecasting assumptions we'll be working on in the next quarter as well as getting the asset management plans through and progressed. So yeah, I guess the key thing is just to note we have flagged that there's some sort of early risks were noted in the May report, and I guess key risks that we're flagging up at the moment is just that capacity. There are a number of areas where we've got staff changes and staff who are away, and we've just outlined the mitigations to where we've reprioritised work to make sure that we do keep our LTP work progressing. We've been looking at some contract support for the revenue and financing policy review, and we've got recruitment underway for a vacancy in our policy team due to a resignation and departure recently. So that's essentially a summary of where we're at and where we're going.
Okay. Questions, comments? Councillor Bex?
It's more a HR question actually, because you've said you had a resignation in the area, and because given the environment of lots of work, lots of pressure, I just wondered, do we do exit interviews and whether the resignation was because of another opportunity, or whether the workload was too good or too big, or just given the fact that we've had a bit of a scene set up.
Do you want to put it in public excluded? Is that appropriate? Because we're talking about staff, I think resident public excluded.
Okay.
SLT update?
Yeah. Okay.
Yep. Any other question I have is, obviously we've got 3 waters. That's the biggest uncertainty. And of course the biggest issue is when we're willing and likely to go live, how you manage that through the LTP. You might only have 3 months, but you might actually have we might only have 3 months of financials within the LTP would be the worst or best case scenario, right? But we won't know that till October the 14th at the very, very earliest. I mean, the issue is they still could be in-house the next 10 years, so no further comment to make on that?
It's likely to be February before we get the ordering council out.
Right, yeah.
For a go live then the following October, so if it is October.
If it is October,
And
yeah. And that's going to be problematic. That's a good one.
Isn't it the way we've been handling the change to be business as usual and proceed as if, we're doing it the same as in the past.
Well, I think there's
In terms of LTPs.
Well, let the interim chief executive explain that one.
I know that there's been some emails around councillors around Three Waters and why are we continuing to do stuff if we don't know, particularly around National statement that they would repeal Three Waters legislation. The fact is that Labour's still in, right, until they're out, and they are requiring us through the DIA to continue working through this programme. So we can't say no, we still have to continue. But also, if Labour do get in, and as I just said, if we sit and wait until February to find out when we are going ahead, and then it turns out that Wellington is going in October, we're going to have a lot of work to do in that time. And so the decision has been, that we must continue on that work programme, but not do anything that would then get thrown out. So we're working on stuff at the moment that we would need to work on anyway, regardless if it is national, if it's in, because we know that they're still going to change stuff. But they've given us an indication of where they would like to be, so we're working on those sorts of things, and the other stuff that the reference group are doing, things like branding and what we're called, and so stuff that it's not going to put us in a position where we're prejudiced either way.
And they have funded us somewhat to help do that.
Yeah. The reality is we just have to continue until at least we know more in October.
Well, the legislation is about to get royal assent, so...
It's gone through the reading, it's gone through Parliament.
It's gone through Parliament.
It's gone through Parliament, and so it is waiting on
royal assent, so
which
once
will probably be happening tomorrow.
So therefore it is actually legislation, therefore we've got to comply with legislation. Councillor Tom?
My understanding was that the bulk of the Wellington councils were in favour of going ahead. So why would we be expecting to have Wellington entity?
There are mixed views. There are mixed views, but those who do want to go have got very strong views that they want to go earlier, and that's because of their financial situation. And so they will be pushing to go earlier. And they made it clear with DIA in the room, and DIA made it clear that it doesn't need a majority decision. It's a decision of the government in the OIC. So if nobody wanted to go, it still wouldn't make any difference, basically.
So we have to be prepared for that.
We have to be, and so we're trying to put ourselves in a position where we're not wasting our time and doubling our effort, or wasting our effort, but at the same time that we are not then going to be in a position where we have to do so much work and completely overwhelmed.
Okay.
But you wouldn't want to do so much more work now that's pointless.
No, that's right, and so we're trying to get that balance too, doing what we have to do, but not wasting our time, basically.
But irrespective of what happens, there's going to be a period where you are going to have the Three Waters within your LTP, which was the discussion.
That was the discussion.
That was the discussion. The question is how long. Right?
That's right. So some of the bigger authorities are running two LTPs, two LTP budgets, right? We do not have the capacity to do that. So we're working on the basis at the moment. So having an indication in October is better, because at least then we can start to think about, does it mean that we're going to have it for the whole of the 3 years, which is probably more likely as National get in, whatever changes they can make, I think they will take more time. So we would work on that basis that water stays in and then comes out, after that.
Or 10 years.
Or 10 years, yeah, after the 3-year review.
Yeah. And it's easier from I don't speak for David, but it's easier to put something in and take it out than try and actually put it in after it's trying to put water back into it, to the programs. So that's the strategy. Thank you. That's probably as far as we can go on that one. Thank you, Tanya and Karen. Right, so we've got a recommendation there. You'll move. Do I have a seconder? I'll second. Any further discussion? All those in favour, please say aye. It's carried. can I have a mover to move into public excluded? Thank you, Councillor David, seconded Councillor Tom. All those in favour, please say aye.
Aye.
Right. Confirming our